The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 24 minutes to go until the start of trading, and we got a mixed market right now. You have the S&Ps negative by 3 points, trading at 45.38. We made it to a high of 45.48 overnight, within 2 points of the all-time highs, 45.49.50, though that all-time high coming September 3rd. If you remember, that was the Friday going into the long weekend. We got Jobs Friday on that number as well. We trade low for September. We almost get it all back by October 22nd, within about 12 points of all-time highs. NASDAQ 100 right now, you're negative by 50 points. You're within about 300 points of the all-time highs, 15,427. We got Snapchat trading down in a big way today as they miss. Facebook trading lower on Snapchat earnings as well. Looks like they're having a little bit of trouble navigating the new Apple privacy settings in there. We'll jump over to that in a moment. You get the Dow trading 35,486. We just made an all-time high on the futures, folks, of 35,567. Back to a 15-minute chart to see the action. We'll put it on a 5-minute chart. We made that high at about 7:30 this morning. We've traded lower over about the last hour, though, to the tune of about 70 points below. And you got the Russell right now, negative by 2. Russell trades above 2,300. We're trading at 2291. We got Bitcoin this morning. Talk about a little bit of volatility yesterday. Bitcoin trades all the way from Wednesday approaching 68,000. Yesterday, we approached 62,000. Today, we're up $870 at 63,780. We'll jump over to Ethereum. Ethereum spikes to 44.04. Got to love the fours in there. We're trading at 41.45 right now for Ethereum. We'll jump over in a moment. Interesting article out there in Bloomberg talking about last night. My dad was talking about this on his show. I was talking to him about it. BITO, the first ETF. Now, I think we get another one that goes public today as well. Second Bitcoin ETF. All these ETFs right now predicated on the price of the futures. Okay, so the ETFs are holding the futures contracts. That's how you gain price exposure to the underlying, as opposed to you could be holding the underlying itself, as in holding physical Bitcoin. You may see those coming down the line. The point being, BITO, the ProShares ETF, I think they're at $1 billion already under management for this fund. As it's exploded in popularity over the last few days, you're bumping up against futures limits on the CME. That's going to cause them to go out future months. That's going to cause a little bit of potential contango, where really you're looking for exposure to the current futures contract price of Bitcoin. The ETF could meander and deviate from that price as they're forced to go out future months, which might have a different price point as opposed to the current month. We'll go over it in a moment, but interesting nonetheless. Bitcoin, a little bit higher this morning. There's BITO trading higher by about 40 cents to 41.25. I'll look around. I think we got a ETF coming from Valkyrie. Is that correct? Maybe. One of the articles pointing out, and it's really remarkable, one of the analysts was saying it's already going to be tough to catch up with the first one out of the gate, ProShares. It's pretty amazing, right, that there's literally millions upon tens of millions, if not even billions, at play in terms of all you got to do is be the first one to market by a day or two, and you corner the market. It's almost so tough to catch up once one fund has the acceleration, because if you want exposure, now here's where it may differ. Where it may differ is if they start bumping up against problems where they can't get exposure that matches the underlying because they have to go out into future months. Maybe you have another fund that comes in and says, guess what? We have all current future month contracts, so you have exact exposure to the price you're looking for. Maybe that's one advantage, but it seems like more money begets more money is the phrase, and they got it all right now. ProShares at already $1 billion, but we'll see. And why not? Let's jump over to the article right now. First Bitcoin ETF is already in danger of reaching a limit on futures contracts. It's always remarkable this stuff comes out after the fact. Where were the journalists beforehand? This is, I mean, I know it's $1 billion launch, but Bitcoin ETFs have been talked about, folks, for really 8 years. I mean, I was talking about the Winklevoss twins, man. I know they're doing well because they've been deep in crypto for 7 or 8 years. Anybody that's been deep in crypto for 7, 8 years should be doing very, very well considering the run that we've had. They wanted to bring an ETF to market in 2013. They wanted to do it by holding physical Bitcoin. SEC at the time was not open to that because of the result that it was an unregulated industry. They weren't exactly comfortable with an ETF predicated off of an unregulated commodity, currency that could be manipulated. Bottom line is 2013, they ever started an ETF then, and I think this article may even talk about it, probably would have been one of the biggest and best ETFs out there at this time 7 or 8 years later, considering the run Bitcoin had. But guess what? You don't know, because maybe that provides even more volatility. Maybe the ETF has some problems, and it puts a hamper on the growth that Bitcoin had. Tough to tell, but nonetheless. So after 2 days of trading, BitO owns nearly 1,900 contracts for October, okay? That's the current month. That's the front month is the correct term I should be saying. Contracts, the max you can own is 2,000 on the CME for front month contracts. Any entity, the most they can own is 2,000. So what they've done is they've already had to start going forward. To avoid hitting the limit, the ETF has amassed 1,400 November contracts. They're bumping up against the November one already. But at the rate it's adding assets, the fund already has more than $1 billion under management. They're going to bump up against the 5,000 total limit pretty soon. An immediate solution is that for them to spread out the holdings to longer dated contracts. I mean, immediate. We're talking about pretty immediate. They may bump up against 5,000 in no time, let alone you don't have exposure to the front month, which is probably what you're looking for, as the dates in future months may differ. Then you have the rolling costs that are going into this in the ETF. Okay, you want price exposure to the current month, and you buy the ETF, and you don't even know that. Guess what? You're going to pay up big time because you got 1,900 contracts in the current month. You already have 1,400 in the next month, and you're going to have to roll those. So within 2 months, you're going to have to roll those. People know that roll is going to be. Anytime somebody can front lead your trading, folks, if they know what you have to do, think about it. You know that this fund needs to sell 1,900 contracts potentially, or 1,400, roll them into the next month, okay? And where is that going to go? They're already bumping up. What's it, 1,900 plus 1,400? You're talking about 3,300 contracts they already have in just the 2 front months, let alone if they're a little bit further out from there. The potential good news is that the CME is raising the ceiling to 4,000 front month contracts starting with November futures, but there's still going to be a limit of 2,000 going out any month after that. The current pace of inflows could see BitGo hitting those curbs too. The launch of competing products, there they go. So Valkyrie, Van Eck begin to do both due to begin trading in the next few days. And one of the things that one of the people is saying in here, that this could push the SEC even further and accelerate their process of potentially approving an ETF that holds physical Bitcoin. Now, the reason why I brought up the Winklevoss twins, man, can you imagine being them saying, are you kidding me? You launch an ETF predicated on futures that goes basically haywire, because you can't own as many futures contracts as the ETF needs to own to have the price discovery and the price exposure to the underlying. And as a result, they're going to approve what the Winklevoss wanted to do 8 years ago. Remarkable. And I will get a chart up of where it was 8 years ago in terms of 2013, which is when they were trying to push that out. We're at $1,000 maybe, 5,000, 3,000, something crazy. Nonetheless, that will be an interesting one to get your head around. Really interesting. We come up on the roll for those contracts. Bitcoin trading 63,710. Stay tuned, folks. We got a lot of earnings to go through next. Snapchat down 20%. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We have the S&Ps right now negative by 5 points. We've traded off about 12 points, though, from where we were about now, hour and a half, 2 hours ago, trading at a 7:30 a.m., about 45.48. Let's jump around to some of the stocks that are moving today in social media. Watch out, folks. Snapchat right now. You're down $18. $17 right now, trading at 58.36. You spiked to $52 last night, and it is quite a miss for Snapchat out there. Q3 earnings, as they say, down 20+% right there. Getting into the numbers, adjusted earnings per share, 17 cents versus 8 cents. Revenue, $1.07 billion versus $1.1 billion was expected. Global daily active users, 306 versus 301. Warned they posed a risk to Q4 earnings, talking about Apple's consumer-friendly changes, but said on Thursday the iPhone's privacy settings impacted Snap's advertising business more than anticipated. The CFO warned that between Apple's privacy changes, supply chain interruptions, any company that misses, folks, is going to blame the supply chain no matter what. You're going to see it. You're going to see labor shortages as well. I'm sure they are a variable that Snapchat is facing. The real variable they're facing is that Apple completely changed their software to make it difficult to track people, which advertising companies love. Snapchat is an advertising company. The company said it expects fourth quarter revenue to come in at 1.16 to 1.2 billion. The market was looking for 1.36. It's a massive miss, folks, in terms of the expectation, in terms of the revenue. Net loss narrowed 64% to 74 million. Okay, so they got a loss in there. But unfortunately, these changes are occurring during a season when our advertising partners would normally expect their supply chains to be operating at peak capacity, and at a time when we would otherwise expect peak advertising demand to drive peak contestation, and therefore peak pricing in our auction. And Anderson said in the prepared remarks they should continue. That did not happen, right? Not happen at all. So Snapchat tanks. They're down 17%. Market says, hey, same thing's coming with Facebook probably. Facebook goes from 342 down to 315. We're trading at 326 right now on the open. Keep your eye on that one, man, because, boy, it is a wake-up in terms of just how predicated their business is off of tracking people on their sites and being able to hit up that targeted advertising and selling that targeted advertising to advertisers and selling it at a premium price. And you combine the fact that goods are going to be scarce, supply chains are constrained, and as they said, people may not have the goods that they need to be advertising as we come into Black Friday, right? Holiday shopping, November, December. It's going to be an interesting holiday season, to say the least. Snapchat down big, Facebook down big. Let's see if it's even hitting Twitter. I know Twitter's a little bit of a different story. Yeah, Twitter down $2. You see the difference there. Not quite the same in terms of targeted ability to hit people there. But Facebook, we'll see where Facebook opens. That's going to be a heads up, folks. It is a big miss revenue rise. 1.36 they were expecting, and they come in at potentially 1.16. You're talking about missing $200 million. That's a 15% miss on revenue. Don't want to be missing 15% on revenue. We might see some problems with earnings in terms of costs is one thing. I think these companies will be able to get over the cost. We might have a pullback. We might have some hiccups in the span of 3, 6, 12 months, 24 months, some of these companies. But if you're growing revenue and there's inflationary tendencies, you can raise your costs, right? You can get over the supply shortages. You can get over finding good help potentially, right? You can't get over when you're not growing your revenue where the market thinks you are. That one's not going to correct itself unless you correct it as well. All right, what else we got out with their what else do we have? Companies out with their numbers. Yeah, Boston Beer. Let's go over this one. So decline in sales in Truly Hard Seltzer, and Intel's down 10%. Don't worry, we're going to get to that one, folks. But Sam Adams, they have been in trouble in a big way. The stock continues to trade lower. Unexpected quarterly loss due to a decline in sales in its Truly Hard Seltzer brand, despite efforts to grow in that category. Now, that's a quick summation. They just keep having a guide down in terms of whether it's the whole industry they're talking about for hard seltzer being not even close to what they anticipated, and their role in that industry not even being as close as what they thought. You're down almost another $20 today, another 4%. You take a look at this thing, though. I mean, where's the bottom here? Maybe 400. Maybe that's where I'd be comfortable getting into this equity. You're now under 500 as you come into their earnings. You had a straight shot from 300 to 1349. You're already back to 400, folks. You got a 400 price tag. Seems all but natural that maybe you come into this area in February of 2020. Remarkable. You're going to give it all back from 300 to 1349. We're trading at 497 on Sam Adams. Be careful with that one, even at this price, because as you see, yeah, we're coming into. We did have a spike in volume there going back to June 22nd. You traded from 519 to 570, but as I said, we're below that price point, and you're coming into basically the lows we had in June of 2020. You see that low, 498. We got a bid ask of 498, and no reason why it should really stop there. Not like we have any concrete volume or anything like that. 400 is where I would be looking for potential Sam Adams. That's if you're looking to get into this equity. Boy, talk about getting ahead of themselves, thinking that hard seltzer was going to take over the world. Not so much, not so fast. All right, Intel tumbling 10% in pre-market trading. Chipmaker predicted lower profit margins over the next few years due to ongoing investment in new technology. Quarterly earnings $1.71 a share. The market was looking for $1.11, but sales, revenue, short of analyst projections, not what you want to hear. Again, revenue can't fix itself, folks. You're down to $50 this morning, okay? We don't have the action. I'll pull it up real quick. There's your 15-minute action. This thing making basically session lows from the $56 you were at last night, and put this thing on a 3-year weekly, right? You're going to open at 50. Seems all but natural maybe you make it down to 45. Okay, this is a 3-year weekly. You go back to the middle of 2019, we had some support there. You go back to August of 2019. You go back to the COVID lows of March. You go back to October of last year. We caught a bid at around $45, and the acceleration really took off in December when we were trading at 45.24 is the low there, and we're going to open at $50. No reason why this thing finds a bid of $50 right now, as they're facing some problems anyway, and they're going to open down 10+% this morning for Intel shares. A little bit of negative gas going on in the earnings today, right? Snapchat, Intel, Sam Adams. We're going to get Chipotle out with their numbers as well. We'll pull them up. They had some big-time volatility last night, but you're trading basically flat right now with a bid ask at $18.35 by $18.39. You're up to $18.85. You're down to $18.10. This thing's going to open basically flat. We'll see how the market reacts on the open. We jump to Tesla shares. Tesla holding steady at about $8.95. Now, it's always interesting, folks. I bring this up because Chipotle is basically flat, but we'll see where supply equals demand when the market opens. Tesla accelerating higher yesterday to 900. We're holding right near those highs right now for Tesla. Interesting action on Netflix. You see this one? come out with their numbers Tuesday. Pretty decent numbers. You trade slightly lower on Wednesday. I was chatting with our man Kevin Hincks from Fast Market, TD Ameritrade Network, and we're both saying, pretty decent action. You've had a run from $500 and change up to $650 almost coming into earnings, and you settled down marginally lower on Wednesday. Well, man, just out of the gate yesterday, folks, Netflix trades up almost 5%. I think they finished the day up 4% and change. You make a high of $655, and if you take that spike high out on earnings, right, $655, you pull up the daily, you're talking about all-time highs, folks. That's where we're going to be. That was yesterday's price action, $654, and look at that bar, right? Crazy. You don't normally see this in terms of earnings event. Next day, things are pretty tame, and then the market accelerates higher to a big degree, trading at 650, 651. Big numbers. We'll see where they're open as well. All right, folks, we got the markets in negative territory to kick things off, but barely in the red. S&P's negative by 5. We made it within 2 points of an all-time high this morning, pre-market in the S&P's. We'll see where we open. We'll be right back in 3 minutes for the opening bell.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we got markets open right now. We got the markets in the red. Dow catching a bid. We're up 9 points in the Dow at 35,473. The S&P is negative by 7 points, trading at 45.34. Let's see how some of the companies are opening that had some moves pre-market with their earnings. Snapchat down about 21% right now. Quite a haircut for Snapchat. Chipotle out with their numbers last night, trading basically flat. Remarkable. You're up $8 at $18.51 for that company. Sam Adams out with their numbers, $4.94. Down 4%, continuing the slide to negative prices out there. We have some more numbers out there. How about Mattel trading higher by 6%? Mattel jumping over to some of their numbers right now. Mattel, toy maker, said supply chain disruptions would not prevent it from having a strong holiday season. Kind of surprising, right? If anyone's going to get hit, maybe it's the biggest toy company out there. I know that it might not be the biggest. You got Hasbro out there as well. Many companies making toys. They beat estimates on the top and bottom lines. 84 cents versus 74, but surprising to see. Not going to prevent it from having a strong holiday season. Digital World Acquisitions. We got to talk about the Trump SPAC. My goodness, right? This thing. Up 189% from where we closed yesterday at $40. You were trading at $10. I remember talking about it during my show yesterday, folks. It was at $11. You had a 12-bagger out there. A 12-bagger. Wall Street Bets, they got it going in a big way. I think this is a Reddit, a GameStop type phenomenon, folks, and credit to them. You know, if you want to get a stock that can get some momentum behind it, get one that's got President Trump behind it, man, because he's got some followers. Can't deny that. Now, it's remarkable when you look at, there's going to be many articles written about this, and the breakdown and how this works. I think we're all somewhat familiar that there's just a 22-page deck right now that basically talks about nothing in there, that says they're going to take over the world. Hey, it's remarkable what these SPACs are doing. I'm surprised it took Trump so long to start one, to say the least. And there's some big players in terms of who has action here. Thursday's rally, let alone today's rally, right? That's why, I mean, can you imagine me, a financial reporter, trying to figure out who owns what of these shares, what's happening? D.E. Shaw owns 8% or 2.4 million shares. Well, folks, 2.4 million shares. This thing just went up $120. For every million shares you own, that's $120 million. That's $250 million that D.E. Shaw owned. Yeah, let alone you have Arc Capital holding an 18% stake, or 6.6 million. 6.6 million. They're going to make $1 billion just on that alone. Saba Capital, Highbridge Capital Management, Lighthouse Investment Partners, big early investors in the SPAC. 22-page slideshow. Now, what's interesting here, folks, you can't make this stuff up. Reality is amazing sometimes. What a time to be alive, as they say. Patrick Orlando, the CEO of Digital World Acquisition Corporation, said in a press release, formed to create public shareholder value, and we believe that TMTG is one of the most promising business combination partners to fulfill that purpose. All right. Now, Mr. Orlando, a graduate of MIT, outstanding university, Tech Institute, maybe, Massachusetts Institute of Technology, outstanding college in Boston, of course. Spent 5 years at Deutsche Bank, where he worked in emerging markets, fixed income derivatives. Later moved on to South American sugar industry, currently involved with at least 3 other SPACs, or so-called blank check companies. Here's the kicker. Can't make this stuff up, folks. He also runs companies incorporated in the Caymans and headquartered in Wuhan, China. You do with that what you want, but that kind of blew my mind. So President Trump's got a SPAC, and the guy running it is creating companies in the Caymans, and he's headquartered them in Wuhan, China, and the thing is up 1,200% in 2 days. That's reality, folks. There you go. Buyer beware. Anytime you're playing any of these meme stocks, folks, buyer beware. The value of this stock, who knows where it ends. GameStop shares down at 178.30. Maybe they're taking away some of the buying demand in GameStop as it's all going to DWAC. We'll jump to AMC to see how they're trading. AMC down a little bit lower as well, down 5.5%. Maybe that is the reality. Maybe some of the demand getting sucked out of some of these GameStop meme stocks, we'll call them, the Reddit stocks, Wall Street Bet stocks, as DWAC, trading higher in a big way. Crazy action. Can't make that stuff up. All right, jumping around to what else we got going on. We got a bunch of other companies with their numbers. It is a big day of earnings. We'll jump to Honeywell. Beat estimates by 3 cents, quarterly earnings of $202, revenue slightly short of forecast, seeing strong growth across its segments, but facing tough supply chain challenges is how they put it. HON is their symbol, I believe, right? HON. There it is. So they opened down about 1.5% today. AXP, American Express, with their numbers trading higher by 3.4%. You take a look at this thing on a daily. Quite a run for these companies. Take a look at it on a weekly. Look at that. From 67 to 183, you came into 2020 at a price of almost 120. So you're up 50% over 2 years of this company. $227 a share. They beat $1.80. Revenue tops forecast, driven in part by a record card member spending. Urban Outfitters added 2.7%. They get an upgrade to buy from neutral, citing more favorable risk-reward profile following a 25% slump in the stock since they last reported. I mean, yeah, that's quite a slump. Let's take a look at how they're doing on the open. They're up 0.8%. Nothing too dramatic there. That's a 3-year weekly. We put it back going for a year, and you can see basically coming back to where we were in February prices. And Zoom gets an upgrade as well. Let's see how they're trading. Probably similar action. Up 4%. But, man, this thing, talk about a haircut in valuation here. JP Morgan saying the stock reflects a post-pandemic slowdown in remote video communications. It's already reflected. The firm has pulled back. The company's pulled back so much. The firm said growth will bottom this quarter, then accelerate due to increasing adoption by business. Zoom, as they said, what are we up now? 4% right now. Let's see how Netflix is trading right now in the open. Netflix up another percent to 660. Quite a run this thing is having, man. Tesla shares. Did we get a high? We got a high, folks. 903.32. What was the high? 900.40. The high yesterday, I think we got was 900. Let me put this in the fit. Yeah, yesterday we got to a high of exactly 900. Well, the all-time high was 900.40. We get there today. All-time highs for Tesla shares trading. Let's check out some of the FANG stocks this morning as we have the S&Ps climbing back to the positive. You got Apple up 0.3% right now. Amazon shares down 0.2%. Microsoft shares basically flat. Let's see how Snapchat is handling the open. Down 20%, hanging on to those lows. Facebook, not bad, down 3.7% in terms of where Snapchat has been. Some big numbers there. Let's see how Intel is opening up after they were down. Down 11.5% for Intel. Watch out on that one, folks. Thanks to our man Dave White posting some movers in there in the den. We got Intel down 11%, man. AXP, American Express up 3%. Mattel up about 1.3% out there as well. Let's check over to Bitcoin. Bitcoin, 63,585 right now. We got crude oil trading. Look at the volatility in crude. Down to 81 yesterday. Just like that, we're almost back to all-time highs as we commit to summer trading at 83.43 for crude. You jump to gold. Gold. Yeah, how have we not talked about gold yet? They've been talking about gold in the Tiger's Den, man. Talking about nice to see gold catching a little bit of a bid on a Friday. Up $25 at 1807.70. And we jump to notes and bonds. Some flat action right now. You're talking about yields, in the 10-year of 1.67%. You take a look at where we are. 1.68% we hit earlier, 1.7% right now. The yields, when you go down the curve, you're looking at whether it's the 10-year, 1.67, the 30-year trading at 2.11% yield, the 5-year, 1.22% yield. And as we wrap up this segment, the VIX, almost back to 14 handle in the VIX. Stay tuned, folks. I'll be right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we got the Dow catching a bid. Dow trading up 139 points right now, 35,619. Is that a high? Yeah, I believe we just got a high print right now. You back it up. The high is 35,005, so we're dealing with all-time highs right now in the Dow. Backing this out even a little bit further to see the channel that we were in there that I had. Broke out of that channel in September. It would take some oomph to get back into that channel. You extend that. We're talking about a price of about 36,600. Not sure we get back above that channel line, but nonetheless, we're trading higher to highs in the Dow. S&P, you put it on the 3-year weekly, within about 4 points of that all-time high. 45.49.50. We made it up to 45.44.75. We're trading basically at the highs right now, up 4 points. NASDAQ 100, you're talking about within about 250 points of the all-time highs, 15,708. And the Russell bumping up against the upper portion of this consolidation it's been in, that upper boundary about 2350. We got above 2300 for a brief moment this morning, back under that price level at 2290. All right, you want to talk about some volatility. We'll keep it on a 3-year weekly for right now. Here's a chart of Beyond Meat. Watch out, down 15% on their numbers last night, or did they provide down? Lowering the third quarter revenue outlook. It's quite a lowering, too. They now expect to report net sales of $106 million for the quarter, down from a prior forecast of $120 to $140. $120 to $140. If they came in at $140, and now they're saying maybe they'll come in at $100, wow, they can always miss their forecast, but let's just say they come in at like 105 for simple math. That means they missed by $35 million in revenue. That means they're missing by almost 25% in revenue on the quarter. That's a problem, folks, in a big way. Beyond. Now, this thing, man, I remember when this thing got up to 239. I remember talking about it with my dad on the air. Remarkable. You're talking about more than 2 years ago now, because the real thing that was remarkable there was you took a company like Beyond, you compared it to the market capitalization value of a company like Tyson, okay, that has the supply chain delivery, you know, and we're all experiencing supply chain problems right now. But when you get into a company like that, it was just so far out of whack, folks. And here we are, you know, more than 2 years later. We were just trading at $220 in January, and right now you're going to open. We're at $92 on this equity, and you jump over to the fundamentals. What are we talking about for market capitalization now? You're talking about a $6 billion company, and that's why I think we're approaching like $15 billion, something like that. At that, what would it be? Yeah, it'd be about $15 billion the market cap. Tyson, what's interesting? You pull this up. Now they were back then, okay. Let me see what we were just doing. What was that price we were at? We were at July of 2019, okay? And in July of 2019, you had Tyson trading basically where we're at right now, which is interesting, okay? Now you jump over to the market capitalization of a company like Tyson, you're trading at $29 billion. So there you go. So you had Beyond Meat valued at half the value of a company like Tyson. You had Beyond Meat valued at like $16 billion. You have Tyson valued at $29 billion. And you know the competitors are coming for them in a big way. Just stuff you want to keep in mind, folks. You know, you have a company like Tyson. They have the supply chain. They're in every single grocery store in the whole country, right? They're going to be coming out with competitive products to a Beyond Meat. And nonetheless, here we are 2 years later, and you got Beyond Meat slashing numbers. I mean, you talk about 2 years ago, Beyond Meat was valued at $15 billion. Okay, and this quarter they're only going to take in $100 million in revenue. Watch out for that one. It makes me think a little bit of WeWork. I was listening to Bloomberg early this morning, and they were talking about saying, you know, he had a big party yesterday when WeWork goes public, and it's remarkable. I think they raised like $17 billion from SoftBank, WeWork did, and the company comes out and is valued at like $8 or $9 billion, right? All they had to do was just take the money that they raised, put it in a checking account, and you would have been worth $17 billion plus. So they lost half the money, they go public. Really remarkable, though, to give Mr. Newman a little bit of credit because he walks away a multi-billionaire, all right? And SoftBank made the error here in a big way. They've made a few of them. He was able to raise $17 billion for a company that can't make money. I mean, that's a salesman if I've ever met one, folks. And he cashed in a big way, $2 billion. Not sure I would have been partying on that day, as there were a lot of people hurt in that same way that raised that money. SoftBank, probably the one that's hurt the most, though, and they're one of the brightest investors out there. So they made a big gamble, and they lost. Newman, to his credit, he retained a lot of control. SoftBank was crazy giving him $17 billion when they can't make any money and letting him have all the voting shares. They had to pay him off to get control of the company. They made I don't know how he spun that deal. I don't know how he spun it. He spun it right up until they tried to go public, and then the market kind of said, hey, I don't know why SoftBank's been giving you all this money the way you're running this business, but you got to make some changes before we push you out to the public. And that's where things went awry. But just think about that, right? He raised $17 billion for a company that can't make profit. That's quite a sale, folks. I don't know of any company that can raise $17 billion for a company that can't even turn a profit, and let alone, we'll see if that company is going to even function in the capacity it's in. You're valued about $7-8 billion right now. All right, speaking of prices, we'll jump around to what else we got going on. Consumer prices. Article out here from Bloomberg. Think everything's expensive now. Get ready for what's next. And it kind of just talks about some of the trends in terms of some of the companies coming out, whether it's talking about Nestle, Dannon, Procter & Gamble, Unilever is in here, okay? Prices across OECD countries are rising fast. We're all kind of familiar with the spikes we're getting there. The makers of Dove soap and Magnum ice cream bars jacked up prices by more than 4% on average last quarter. I like those Magnum ice cream bars. Biggest jump since 2012. Companies are facing a dire mix of supply chain challenges and higher costs for energy, raw materials, packaging, shipping. Inflation has accelerated rapidly. In the UK, the cost of hedging against inflation over the next decade rose on Friday to the highest level in 25 years. Okay? This is a story that's consistent across the globe. Consumer goods companies are responding to surging costs. 4%. There's your Unilever underlying price growth. This is Unilever, okay? Underlying price growth. You see it. They're jacking it up in a big way right away. And they were... Yeah, the Nestle CEO, you can't pass on increases from one day to another, but now the action is underway. Nestle's overall pricing rose 2.1% in the third quarter, the fastest in the last 5 years out there. Procter & Gamble, and they make so many things, folks. $2.3 billion in expenses this fiscal year from elevated commodity and freight costs. Did you see that? $2.3 billion in expenses from elevated commodity and freight costs. It's increased prices on numerous products, and says the situation will continue to evolve. And I mean, if you're not familiar with Procter & Gamble, folks, I do have some Procter & Gamble in my retirement account. And just check out the brands, folks. It just doesn't stop in terms of where they're in. You talk about Love's, Pampers, Bounce, Downy, Gain, Tide, Bounty, Charmin, Always, Gillette, Venus, Head & Shoulders, Pantene, Cascade, Dawn, right? Crazy. Gain. All of these are going up, folks. The whole grocery store is going up. regardless of what he's talking about, energy, Crest, Oral-B. It's remarkable that they own everything in the grocery store. Pepto, Prilosec, Gillette Personal Care, Old Spice. They got the Old Spice man in there. Remarkable. Secret. So everything's going up, folks. It's going up in a big way. Rent prices are going up. Wages are going up. We'll see. We'll see where we go from there. Stay tuned, folks. I'll be coming right back to finish up the show. S&P's negative by 2. Dow up 118. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got Amazon right now down 1%, trading at $33.98. So they're talking about Amazon, the Tiger's Den, and Amazon invested everything they had for a while and avoided profits. It was interesting. I was just trying to go back and figure out kind of how Amazon meandered that, trying to see. I don't know if how much money they raised, and I have no idea the sourcing of this info. But here's Amazon's net income by year, going back. So the years that they really crushed the negativity of the profits. 2000, they lost $1.4 billion. They lost $700 million in 99, so that's a combined $2.1 billion. They lost another $567 million in 2001. So what are you approaching? You're approaching 1.4. There's 2. There's 2.7 billion. But check it out. They weren't making any money, but they really weren't losing any money. And when you compare it to a company even like WeWork, right? Raised $17 billion, and they only got $8 billion market capitalization left. In the 2000s, They actually were making money in 2004. They're making money in 2005. They're making money in 2007. All right, when you look at it, just put into tax, $21 billion profit is what they had in 2020. You see as things ratchet up. Now, it's really remarkable in terms of, oh, come on, where am I? There we are. 2015, 2016, right? Things just accelerate to the juggernaut that they are right now. But you look where they are. I mean, to their credit, they did have some losing years, but you're talking about what? Losing $241 million in 2014. You're talking about a company now that's pushing almost $2 trillion market valuation. And one of the things that really skewed WeWork was the fact that SoftBank kept being the only investor and raising money for WeWork, increasing their own investment value. They say, okay, we're going to raise money for WeWork. We're going to raise it at a $1 billion valuation. Great, we'll put money in. And then SoftBank a year later says, hey, guess what? We're going to raise money at a $3 billion valuation, and we're going to be the one that gives it to you because nobody else is going to give you that $3 billion market cap valuation. Guess what we just did? SoftBank just made their prior investment worth a 200% profit as it rose. That was one of the biggest problems and the reason why SoftBank was the only one investing there. All right, folks, S&P is positive by 2. Stay tuned. We got our man Basil Chapman coming up next. And if you didn't get a chance, folks, Tuesday to attend Basil's webinar, the archive is available now for subscribers. You'll see it on the front page. You can sign up, gain access to the opening call. You can check out that archive over the weekend. Whenever you want, over 30 days, you get a money-back guarantee. Can't go wrong with Basil's daily trading service, folks. Live programming all day at TFNN. Have a great Friday, everybody. Thanks for tuning in.